Hello everyone and welcome to today's session after a long time, and we will also cover in this session there were a few topics which were remaining still in the fixed asset series, and there are so many things which we need to also cover, but the main thing is like I have covered acquisition, depreciation, and there were certain setups in the fixed asset module. In today's session, we will see how to dispose of a fixed asset as a scrap, meaning without any revenue earned, to just simply write it off from the books. So we will just cover, first of all, there will be an introduction about the topic and what are the basic prerequisites will be next, and then a scenario will be discussed where we need to for certain asset we need to dispose it off as a scrap, and we will create the transaction through the fixed asset disposal journal, and then we will also see and observe what are the different lines posted as a voucher. So we will just start with the introduction, and in this one basically fixed asset is basically eliminated, and elimination is another word for disposal as a scrap. So basically this is what we are going to do in today's session, and basically what it is performing as a part of scrap or disposal. It will basically reverse all the previous transactions which were posted as a balance sheet or in the balance sheet accounts, such as there was an acquisition when you posted or acquired an acquisition transaction. When you acquired an asset, so you debited the asset account, and so credit goes to maybe the bank, or retained earning if there is some cash or you have bought an asset. So now it needs to be reversed. So there is also accumulated depreciation. When you post a depreciation, that is an expense. So the opposite side goes to the accumulated depreciation, which is a balance sheet account. So at the end of day, the accumulated depreciation will tell you how much the asset has been depreciated. So and if there are other balance sheet accounts, those will be also eliminated or reversed. So what will be the type of transaction which are posted as when you eliminate a fixed asset? Basically, it is like acquisition adjustment can be, depreciation adjustment, or any write-up or write-down or revaluation transaction can be basically reversed. So, I mean, whenever you post it as a sale scrap, so these type of transaction which were earlier on posted will be reversed. So, okay, so these are the basic entries, and you can see here the accumulated depreciation which was credited earlier on when you depreciated an asset monthly basis or yearly basis. So the expense or depreciation account was debited and the accumulated depreciation was credited. So as a part of sales scrap, now it will be debited because it will be reversed or eliminated. So similarly, there will be some fixed asset gain or loss, credit and debit. The same amount will be in this case because it's in a scrap. But if it is sales, so some maybe profit or loss may occur as a credit or debit. So when you go to the fixed asset acquisition account, so this will be now credited because earlier on when you acquired the asset, it was debited. And then there is net book value type of transaction which will be basically posted to the P&L also. So these debit and credit in the last you can see will be the net book value, which is whatever is the net book value at the day of when you sell it as a scrap. So this will be posted into the P&L account. So the prerequisite is simply the posting profile in the fixed asset need to be defined for specifically the sales scrap type, and earlier on the ledger accounts must be created and defined, and then you need to define in the posting profile various kind of the transaction. For example, depreciation for current year, previous year, net book value of the asset or acquisition. So these are the kind of, the lines need to be defined in the posting profile. The account settings are simply found in your fixed asset module, and go to the setup. In the setup, you will find the posting profile page, which will show in a moment, where you can basically select, there is a lookup from where you can select a disposal. From the first tab of disposal, you can select the script in the lookup, and it will show the posting profile for the sales script. So this is the screenshot for that, and here basically there is a posting profile defined, which is also in the parameters. On the right hand side, you can see there are various books, as many books as you define for a fixed asset or attached to a fixed asset. Against those, these four at least post value type need to be defined. So the depreciation prior year for SLSL, that is straight line service life book. For this, we have defined there are two accounts for this, and on the right hand side you can observe in the offset we have defined only the P&L account. Whatever the loss or profit will go into that account. But here what is defined is basically the accumulated depreciation. These two accounts for depreciation prior year or this year is for accumulated depreciation for this asset. And then there is acquisition value, post value type, and which need to go to the asset account. Whatever is the asset account for the asset. 100 is the asset account, and offset again P&L. And not net book value. In this, we have defined on the both sides the P&L account, as we have shown in the previous slide. So here you can see at the last, you can see the net book value will be debited and credited in this one. So this is what we have defined in the last. And there is another book of you must be knowing that for an asset there can be multiple books can be assigned for reporting purpose. For this, there is a tax book 150 reducing balance. So this is reducing balance, and this needs to be also defined for net book value, and the offset account and main account similarly. We have defined same as for SLSL and for here also. So this is for another book that is for tax purposes. Then we will discuss one scenario. In this scenario, there is a fixed asset which was acquired on let's say January 1st, 2018, and it will be basically scrapped on December 31st, 2022. Rather, we will post the transaction on 1st of January 2022 instead of December 31st. Basically, depreciation has been performed till December 31st, 2022. So the acquisition price is basically 60,000 USD, and the service life is 6 years, and the method of depreciation is straight line service life. So if you divide 60,000 by 6 years by 12 months, so it will be 833.33 USD per month. So the net book value will be calculated as per the following formula, which is simple: acquisition price minus the depreciation. And so there can be extraordinary depreciation, there can be anything else which is also minus from acquisition price, which will show you the net book value. So in this one, we have depreciated for 60 months, that is 5 years, and the net book value is the 10,020 cents, because for 5 years the depreciation amount was 49,999.80 USD. So it has minus, we have subtracted it from 60,000 USD. So now in the next one, we are showing you here we can see that for this net book value is shown as 10,020 cents. If we see this net book value as per formula, so the acquisition cost is minus from the depreciation. So in this way, the net book value is 10,020 cents. So this will be shown in your asset in the value of for SLSL book. And similarly, for the disposal, now what we need to do is After defining the posting profile for sales in scrap and their all the main accounts which we have defined, we need to create a disposal journal or a fixed asset journal and select a transaction type of a disposal scrap. So once we have created the journal, we can go to the lines, and in the lines we have input the date of 1st of January 2023, and transaction type is disposal scrap, and we have then selected the fixed asset number and the book which is corresponding to this fixed asset, and description we have input here, and no debit and credit amount because this is scrap. And then offset account is already selected, pulled up from the posting profile. This is the P&L account 801100. So this P&L account is pulled from the posting profile. So once you have posted this journal, and so what will happen to the asset? So basically in the asset, in the corresponding book, that is SLSL, the disposal date is input because the journal is posted as of 1st of January 2023, and the status is marked as scrapped. So this is how we post the journal, and the information is updated. And we can also check the valuation afterwards. And here you can see that what has happened. Basically, acquisition is the same, and depreciation for the previous year is 49,999 as we discussed, and depreciation adjustment was posted for one day, that is 1st of January only. If you divide that per month amount by 31 days in January, so it will be like 26.88 USD. And once you subtract all this value, so the net book value 9973.32, which is now posted into P&L account. So in this way, this has been written off from the books. And on the right hand side, you can also see another book which is 150% reducing balance method for the tax purposes, and that has also acquisition cost as same, but the reducing balance, that is 150%. So the depreciation adjustment has been posted as per this, and the remaining net book value was posted basically into the P&L account. So in this way, it was reversed from the books. And this is the voucher which is posted now, and there are so many transactions in the voucher, and basically I have exported it to the Excel, and you can see here there are certain transactions for the other book which is 150% reducing balance in the posting layer of tax, and in the current is posted for SLSL, and here we can see that tangible fixed asset is now credited. Before it was debited because this is an acquisition account, so it is now reversed. So then there is, we can see here that 26.88, that is the depreciation expense account for one day. So expense is debited, means increased, and similarly the accumulated depreciation is now goes to the credit side. And then what happens is P&L account is also hit from all these values like net book values and the accumulated depreciation which was reversed, and this was the net book value which is debited and credited at the same time. Similarly, on the tax and on the tax layer also, the remaining book value or the net book value has been reversed. So what was the net book value in that case? We will see here 8437. So 8437 is now here goes to P&L, and so it was reversed, and accumulated depreciation and the expense was depreciation expense adjustment was also posted because earlier on we have not depreciated this. Depreciation was reversed. So now we will start the demo for the fixed asset and for the sales scrap transaction. For this, we need to first go and observe what are the accounts involved here as we discussed, and we can go to the fixed asset modules and collapse everything, go to the setup, and inside the setup there is option fixed asset posting profile where we define the main accounts which are linked with various kind of transaction for a fixed asset. So we'll just open the posting profile for fixed asset. And you can see here there is one posting profile with the name all is defined. And if you can collect the fast tab here, which is the ledger accounts defined for each of the different kind of transactions. So for acquisition adjustment, almost same accounts, and then in depreciation, there is a depreciation expense account and then accumulated depreciation account defined. So in this way, say there are so many accounts are defined in this, and so we can open here the disposal scrap account, and you can see here there are various books against which the accounts are defined, and this is gain and loss disposal P&L account. So at the bottom you can see, if we collapse this the fast tab, and at the bottom there is a sale account defined when you sell a fixed asset, and there is also an scrap option available here. And here we have defined already the book SLSL, straight line service life method. And for grouping means whether a fixed asset group is defined or a specific asset is defined. So we have defined here the all. For example, I will just show you. You can select a table, group, or all. So group means the fixed asset group, table means a specific fixed asset, and all means it is applicable to whether a specific fixed asset or group. So it will be applied to all. So as we discussed in our presentation, depreciation for the prior years, depreciation this year. So there are account for accumulated depreciation, and there is account for gain and loss for disposal of asset. So this account in this way is defined, like main account for accumulated, and in the offset we define P&L account for all. But here in the depreciation this year also, the same accumulated depreciation account for the asset is defined, and here in acquisition value account is defined in the main account, or which is here tangible fixed asset title for this main account. And on the right hand side of offset we are defining a P&L account. Similarly, net book value, post value, here we have defined the main account as on the both hand side P&L account will be defined. So whatever it is loss or profit, it will go to directly to this one. So in the scrap there is no value which is sold, so it is we are condemning it. So means at value 0 we are disposing it off. So this is the basic definition of a posting profile for the scrap, which need to be defined before you can post a journal. So now we will see which fixed asset we need to dispose of as a scrap. So we'll go to the fixed asset and open the fixed asset form, and we can here see there are vehicles of various kinds. So this vehicle semi-trailer is the one which we are interested in. We will go to the valuations. So in the valuation, various books are defined. So we are interested in SLSL, straight line service life. And here we can see that acquisition cost is $60,000, and so far the depreciation till as of 31st December 2022 is this was 49,999 and dot 80 cents, and the net book value remaining is 10,000 dot 20 cents. So if we see also the fixed asset balance report, we will see the net book value as of, I will just enlarge it for you to view. For this book, SLSL straight line is service life, we can see acquisition and then minus depreciation, net book value 10,000, 20 cents are defined here, remaining here. So now what we can do is, this fixed asset balance report you can easily retrieve once you go to the fixed asset module, and in the transaction reports you can go here fixed asset balances, and you can give the parameter like records to include. Here you can just click filter, and just input or look up the value whatever the fixed asset number you are interested in, and specific book if the asset is having multiple books for the reporting purposes. So just click and you will get the report which I have just shown you. So that's now we will just go to the fixed asset journal, which is available once you go to the fixed asset modules and journal entries. In the journal entries, you can open the fixed asset journal. Here you can create a new journal and select the fixed asset entries on the current layer and open the lines. Okay, here you can see a default line is created with a date, current date, which is 31st of December 2022. Up till this depreciation is already posted. So we will just post it on the 1st of January 2023. So, so that tomorrow I'm disposing it off as a scrap on tomorrow's value, tomorrow's date. So then in the transaction type, I can select disposal scrap transaction. Okay, and in the account, I can select the fixed asset which I need to dispose of as a scrap. So this is vehicle number 9. Okay, and semi-trailer is automatically pulled up here. And you can see the book SLSL. And then you can input any remarks or description like disposal scrap of semi-trailer. Okay, debit and credit will leave empty because this is scrap, so on zero value. So in the offset account, you can see here, this is the P&L account gain and loss, which we have defined already. The posting profile is defined. And you can also go and see the printout of this journal. Okay, just in order to preview how the entries will look like. So this is our report, preview report, where we can see there is a zero on debit side and credit side, and the account is P&L. Account type, main account type is fixed asset, and then on the ledger side, the same 801100 account is selected. So the net is also zero. So what we can do is we will now validate and simulate posting for our journal line. So now blue bar is showing that the validation was successful. However, remember here one thing, that there is a MS bug here which does not allow multiple transactions per voucher. So I have enabled that in GL parameters. You can go to journal ledger and go to the journal ledger parameters. And here you can see allow multiple transactions within one voucher. So this is not basically recommended, and for each nature of transaction there should be a separate voucher. But since there is a bug in the product which is still need to fix, so I have enabled for the time being this option, and then I will disable it. So the validation was successful, and I will now post the journal for disposal scrap. So the journal is now posted, and I will also turn it off so that I don't forget it, and per transaction there should be one voucher. So you might also face this problem when you are posting a sales script transaction. So once it's done, let's now check what it has done. Basically, there is because on 1st January there is a small depreciation for one day that is also posted, and then there is a disposal sale scrap transaction which is posted. Now what we can do is we can just copy, but we can also check from here by seeing the voucher. So there are so many of transactions which are now posted as per our presentation also, and we can see this one is a P&L account, and just let me export it to the Excel. So for easy reviewing, let me select all the rows, and meanwhile also let me open this one, the vehicle, and go to the valuations. Okay, in SLSL you can see here the remaining amount, and there is a depreciation adjustment for one day which is now posted, and acquisition was 60,000, and P&L is now showing this much amount which is left over. I will just calculate it here. Okay, so 60,000 and minus, basically first we need to check 60,000 divided by 6 years is the life, so divide by then 12 months. This is per month depreciation. For January, there are 31 days, so divide by 31. So this will be the exact amount for one day. So now what we can do is 60,000 minus 4,999,980 minus 26.8. So this is the remaining amount in P&L, and there is no net book value now. So this is the effect here, and now we have exported it to the Excel, and let's see in the downloads, in the editing. There are certain transactions which are posted on text layer, and so we will just first see what is on the current layer, and we can see here that earlier on it was the asset account was debited, so now it is credited, means the elimination or reversal, and then also the accumulated depreciation was earlier on because the expense was debited and the credit went to accumulated depreciation. So same credit is now debited, means it is reversed. And similarly, the same option. This is now credit for one day and debited here for reversal. And this is the all the entries are also posted to the P&L account. So here we can see 60,000. The offset of this one is posted to the P&L account, and then also we can see the offset of accumulated depreciation for the previous years. 5 years is posted, debit here, credit here, and then there are two other entries which are basically the net book value, whatever it was, so it is posted in the P&L account, so making it 0. So for the tax entries, we can see here there was another layer here, which was a tax layer, and here in this tax layer, the acquisition cost similarly like this SLSL book was posted. So similarly, it was also posted here, and depreciation adjustment was posted when we dispose it off as a scrap, and the P&L was by the net book value, whatever was remaining. So we need to just check this what is there in the depreciation profile, which is basically 150% of depreciation profile for this asset. So I will just go to the this in order to show you what is in this. So here we can see in this book, basically it is a posting layer book when you need to depreciate it as per the tax purposes. So now the status is also scrap shown here, and you can see here depreciation profile is 150%. So that is the service life. This will be on the reducing balance. So reducing balance, 150% of the reducing balance. So it will be in this way it will be reducing the value of the asset. So this is only for the tax purposes. So the remaining entries here in Excel you can see, if I can show you once again, go to the valuation. So here 60,000 was the acquisition cost, and depreciation adjustment was 51,562 for the 5 years, plus there is one day, and you can also check here depreciation expense account 51,562 is the total, and similarly for accumulated depreciation is also the same offset account, and this the net book value is now gone to the P&L account. So means the net is now 0. So there is nothing on the books now. because it is with the nature of sales scrap, it is now written off from the books. So in this way, we have disposed it off as a scrap. If you can also only use this book SLSL, so this will be simpler. These are the other books which are for the different purposes. So an asset can have multiple books. So this is it. I hope there is informative session, and here you can also see that in posting profile this book T150 net book value was assigned also to the P&L account. So this is how we have disposed it of by scrap. So for you maybe it is simpler and you are all only having a one book. So that will need to define all these four accounts. I hope this was an informative session, and I will continue to also make another video about the sales of fixed asset. Thank you very much, guys. Take care. Bye bye.